There's a $2 billion crypto project that's quietly tokenizing US Treasury bonds and making them accessible to anyone with an internet connection. This isn't DeFi speculation, it's traditional finance meeting blockchain. I'm Shay, and after 3 years and over 100 videos and counting, this is Deciphering Crypto, where I make crypto, blockchain, and AI simpler. Today, we're talking about Ondo Finance, the good, the bad, and what to know before you decide. First, 30 seconds so we're all on the same page. Ondo tokenizes cash equivalents and treasuries, products like OUSG and USDY, so low risk yield can move natively on blockchains. Big idea, real constraints. By the end, you'll know whether this solves a real problem or rides the real world asset wave. With the basics set, let's start where most of you care the most, the token and valuation. Let's look at the numbers. Total supply is 10 billion Ondo tokens. Circulating supply is 3.1 billion. That's 33% of total. The vesting schedule for the remaining 66-ish% breaks down like this. Team, advisors, investors, ecosystem, and community get released in various vesting schedules over the next 5 years. Ondo is governance today. No revenue share to token holders at this time. The products themselves, OUSG and USDY, don't require holding Ondo. All right, two practical implications of the token. The narrative risk is product adoption does not equal token cash flows. And the valuation risk is pay attention to the fully diluted valuation versus the market cap and unlock schedules. What would need to change for a clearer value accrual? A formal approved mechanism for revenue share fees or capture more economic rights. That's if the community chooses and compliance allows. The token can be bought on any major exchange like Coinbase or Kraken. Now that the token's role is clear, let's zoom out to why this exists at all. Many savers globally want dollar exposure and treasury-like yield, but face brokerage hurdles, minimums, and geography limits. Stablecoins offer convenience but no native yield. DeFi yields can be complex and very risky. Ondo's pitch is bring cash equivalent yield on-chain with composability and near instant settlement within the compliance rules. Now, if that problem resonates, here's how Ondo actually implements the solution. Think of Ondo as a 3-layer cake. Layer 1 is assets, real-world, short-term treasuries and cash equivalents held by regulated partners. Layer 2 is contracts, smart contracts for tokenization and compliance. Layer 3 is the tokens themselves. OUSG and USDY are rebasing forms that reflect yield in token quantity. Let's see, what are the key constraints? Eligibility and KYC apply. USDY isn't offered to US persons, which is really kind of funny that US citizens can't buy tokenized US treasuries. Redemptions aren't instant. Settlement follows product rules. Mechanics are one thing, but who's running the protocol is another. Leading the charge is Nathan Allman, the founder and CEO, former vice president at Goldman Sachs Digital Assets team with extensive traditional finance background. He's a public figure with a verifiable LinkedIn and track record. Definitely a green flag, real experience bridging TradFi and crypto. Then there's Justin Smith, who's the president and COO. He's the ex-head of the digital assets at Goldman Sachs and ex-Talos Strategy. Documentation and audits are published, addresses and oracles are transparent. Investment rounds include a $4 million seed round in August of 2021, a $20 million Series A in 2022 from Founders Fund and Pantera Capital, and an undisclosed strategic round in 2024 with BlackRock and Morgan Stanley participation. Key partnerships are BlackRock. They're using their BUIDL fund for treasury exposure. Chainlink provides price feed oracles for on-chain pricing, and Verified. They have SEC registered transfer agent status. Even with the credible teams, we still have to underwrite the risks. There are 4 risks to weigh. First is regulatory gating. Eligibility limits, jurisdictional differences, policy can change the game. Second, token product gap. Adoption of OUSG and USDY doesn't automatically reward Ondo holders. 3, dependencies. Custodians, bridges, and oracles introduce centralized and technical risks. And fourth is valuation overhang. There's high fully diluted valuation, unlocks, and expectations. With that on the table, what's coming next and how realistic is it? So what's shipped so far is a tokenized cash equivalent with multi-chain reach and rebasing wrappers. What's aspirational is a broader product lineup, deeper DeFi integration, potential chain initiatives. This is definitely subject to compliance and the team executing. Let's convert all of that into an investment view and some fair comparisons. Right, things that are in favor of investment is there's real demand for on-chain cash equivalents, strong partners, straightforward user mental model. Argument against investment is no current revenue share to token, regulatory friction, heavy infrastructure dependencies, and valuation sensitivity. Comparables to research is the BlackRock BUIDL, Franklin on-chain funds, and real-world asset protocols like Centrifuge or Maple Finance. And then there's traditional alternatives also, like Treasury ETFs or insured savings, and these typically have lower risk and lower composability. Time to land the plane. Here's my balanced verdict and what to watch. All right, execution gets an A. Consistent ship, credible integrations. Technology is a solid B. It's audited, composable design. The bridge and Oracle risks still remain. Market positioning is a strong A. Among category leaders, fast-moving competition. Trust and vision is a B-. Transparent docs, compliance first. Centralization trade-offs by design, but there's really not much utility in the token. Competitive advantage gets a B. Process partnerships and compliance help, but moats will be tested. The overall project grade is a B. Ondo represents a legitimate attempt to bridge traditional finance with DeFi, backed by serious players and real assets. However, valuation concerns and token utility prevent a higher grade. If you consider Ondo, treat it as governance exposure to the on-chain cash equivalent thesis. Keep sizing modest, verify unlocks, and avoid assuming product revenues flow to token holders. I would definitely monitor these three things. First is total value locked and redemption throughput trends, governance proposal around fees and value capture, and then third, regulatory milestones that expand or restrict access. Which should matter more in valuing governance tokens, product adoption or holder rights? Tell me why in the comments. This review is independent and unsponsored, not financial advice. I do hold some Ondo at the time of this recording. Always do your own research before investing. If you found value in this analysis, hit the subscribe button for some good reviews every week. Please share this with anyone considering an Ondo investment, and comment below with projects you'd like me to review next. See you next time on Deciphering Crypto. Take care.